With spreads from just 0.8 of a pip, ActivTrades sponsors the Forex Report.
Hello again. Well, we're back at ActivTrades, and I'm joined again by Ricardo Evangelista. Ricardo, thanks for having us back.
You're welcome. Thank you very much for coming along.
So Ricardo this week is going to show us something that happens when there is a market gap. Now, I don't understand that. Ricardo, can you explain to our viewers exactly what that means?
Yes, certainly. Well, I'll do my best. A market gap essentially means that there is a difference between the closing price of the market and the opening price when it reopens. There was a very good example last week when the announcement that the Eurozone was looking to bail out Cyprus but was demanding 10% or up to a 10% levy on savings deposits. That caused a loss of turbulence, and when the market reopened on Sunday night, essentially the price people were willing to buy the euro was well below the closing price on Friday night. So I can show you an example here, so this is the closing price. And this is the reopening price, or the opening price. It's a huge gap. It's over 100 pips. So yes, it can happen.
You know, is there only a downside to this kind of market event?
Not necessarily. So the downside is that if you have the stop loss in place, that was only, say, 10 or 20 pips below the market, that stop loss wouldn't have been executed until the existing price was met. Therefore, rather than just having a loss of, say, 20 pips, a trader who had a position opened would have had over 100 pips loss in there. But on the brighter side, this could be flipped around in a positive way, and the trader could see a take profit that was only 20 or 10 pips away from the closing price on Friday night, being executed over 100 pips away. So that would have meant a more substantial gain.
But for the traders that have lost, I mean, that's hugely stressful, isn't it?
Well, it can be very stressful. Of course, it's difficult to deal with defeat and with loss. Traders should be aware that it is something that can happen, and it does happen. I mean, it's unavoidable. You will lose some trades, you will win on some others. The objective is to win more than what you lose. Trading is an activity that requires emotional stability. So that's probably the most important factor in determining whether or not you'll be successful in trading, is to be able to keep your emotions in check. So don't get greedy. Don't be fearful. Stick to your plan.
Try and keep calm.
Yes, try to keep calm. Exactly. Stick to your plan, because loads of people they have a plan and they have a strategy to manage the risk, but then they let their emotions come into the equation, and that is their downfall, and they end up losing more than they expect, or not making a profit as big as they could have made.
Right.
We do in fact have quite a lot of material for people that need assistance with this more psychological side of things.
Sure.
And we'll be holding a seminar on the 18th of April in a hotel in Mayfair. You can go to our website, to activtrades.co.uk. And get all the full details and register. But the theme of the seminar will be decision making, but it will be approached from a slightly different angle from what you normally get. So it will be from the angle of using the subconscious as a tool to make quick decisions, and combine that with risk management. So you'll be making snap decisions, and hopefully those snap decisions will lead to more consistently positive outcomes of trades.
That sounds completely fantastic to me. I mean, gosh, that's what one needs to do, isn't it, to make the money? Anyway, thank you, Ricardo, very much. We'll be back actually next week here at ActivTrades for hopefully some more coffee, because it is rather good. Ricardo, thanks very much.
Thank you very much for coming along, and I look forward to next week.
Okay, thank you.
With spreads from just 0.8 of a pip, ActivTrade sponsors the Forex Report.